Welcome everyone, friends, colleagues, and experts from the region to the spotlight session this morning, afternoon, very early morning. So basically we are discussing on learning from the trenches, how to scale up investments in the SME clean energy projects. As you know, this is in line with the overarching theme on how to catalyze energy transition during this session. We will get to hear from project developers and investors and bankers on what are the challenges, learnings, and the opportunities in the financing space for clean energy SMEs. At the very onset, I would like to take this opportunity to thank ADB and the ASEF team for giving this opportunity to PFAN for organizing the spotlight session on financing. Just in very brief, myself, Pamli Deka, I am the regional coordinator for South Asia PFAN. So as some of us might know, PFAN is a global network of climate and clean energy financing experts. We have been offering business coaching and investment facilitation to entrepreneurs developing climate and clean energy projects in the emerging markets. Initiated by the UNFCCC and Climate Technology Initiative, CTI, in 2006, PFAN is currently being hosted by UNIDO and the REIT. With this very brief introduction, I would like to welcome Peter Story, the global coordinator for PFAN, who has been leading the network since its inception, to give the welcome remarks. Over to you, Peter Story.
Thank you, Pamli. Good morning, everybody. Very pleased to be able to join you this morning at this ASEF Spotlight event. And, as Pamli's just indicated, PFAN, the Private Financing Advisory Network, has had now something like 15 years of experiences of working in the trenches, working with SMEs, supporting project development and preparing projects for investment, creating investment pipeline for investors, be they commercial or donor public sector investors. And in that time, we've gathered quite a lot of experience as to what the challenges are and how to really address and overcome some of those challenges. Just to give you an idea, in the 15 years or so that we've been operating, PFAN has supported something in the region of 1,200 projects. We've had to originate considerably more than that to get to that 1,200 number. And of the 1,200, we've been able to raise about $2.4 billion of investment, most of that in equity, some of it in debt and some of it in other forms, for something in the region of 212 projects. And part of the challenge that we are facing as an organization is, how do we scale that? How do we scale in terms of the numbers of projects that we support and get through to financial closure? And how do we actually increase the impact of what we do and what the projects that we support do? So all of that really just to say that we've got quite a bit of experience in this working in the trenches, as we are sort of dubbing this particular session. And what we're trying to do through this event is to provide a little bit of feedback, insight into some of those experiences and provide some pointers for the way ahead. I think, what we're facing with SMEs in clean energy and climate project development is a perfect storm of lack of information. We're dealing with first-time project developers who are often deploying technologies and business models that are not tested and not proven. And that means that investors really don't have access to the information that enables them to make good financing and investment decisions. We're seeing, I think, often that company valuations are inflated, and also that the developer, the company owner expectations on their own timing and readiness for coming to market are unrealistic. And this is one of the areas that I think PFAN and activities like PFAN in project development have a big role to play in working towards valuations that are realistic, in working towards valuations that are acceptable for both the developer side of the equation, also the investor, and also in really managing the expectations of how ready projects are. And this is really important because, I think, as you will all know, you really only get one shot at it as a developer. And mistiming that shot, the wrong timing of your approach to investor, can mean the end to your project if you're not very careful. So again, this is where the hand-holding that PFAN provides and other sort of organizations in the project development value chain is incredibly important. A couple of other things to mention, I think the importance of curating and working with the investor community. And that's obvious and sounds banal, but it isn't. And it actually requires a tremendous amount of resource to be able to, one, understand investment markets, two, understand who are in those investment markets and what sort of appetite they have, and to interact with those investors in such a way that you can make really educated matchmaking decisions and match the right project with the right developer. Some of the, I think, against this background, some of the products and innovations that we are working with and trying to develop and bring forward and really sort of bring through to the developer community and help them understand in terms of financial innovations. I think we're developing new products and new financial approaches all the time. And some of the things that we're using within PFAN, beyond the normal grant or equity and debt approach, is mezzanine finance. And I think we'll hear today from Fourth Partner Energy, one of the panelists. PFAN started working with them a long time back, helping them to raise impact investment from a consortium of European funds. And really, the mezzanine instrument is so important because it buys investors time to be able to understand information coming out of those projects. And this is really important when you're facing uncertainty around valuation, uncertainty around the performance of management teams. I think we're also looking at things like revenue-based debt, micro venture capital. A lot of work is happening at the moment within PFAN around bundling smaller projects together to reach investment scale, whether that bundling be through agglomeration of individual transactions or into sort of green bond and other securitization type instruments. And another area that we're sort of developing and devoting a lot of time towards is gender lens investment. We investigated and wrote an article on this last year in a publication called Technology Perspectives. Please take a look at that if you get a chance. In terms of the way forward, and I think some of the things that we might be talking about today, I think new technologies are providing and helping develop a way forward in terms of data collection. The generation and collation of data is, I think, really, really important to help make better investment decisions and to help channel investment into SMEs. And we're seeing through the conflagration and the combination of new tech platforms, mobile communications, and AI, blockchain technologies and the like, that coming together, really enhancing viability of projects and investments as we go forward in this SME space in the climate and clean energy sectors. And ultimately, I think what we at PFAN are looking at is a lot more involvement and coordination with both the investor communities and also the donor and government communities in which we work to really focus project development and preparation support much more efficiently, much more fluidly than perhaps we've been able to in the past. And I really hope and look forward to the panel discussion in which we'll be exploring perhaps some of these ideas and techniques. That's my piece. I'm looking forward to a really vibrant discussion. Thank you very much for joining us this morning. Pamela, back to you, and looking forward to staying tuned in.
Thank you so much, Peter. Thank you for your insightful comments. But yeah, I think you have very importantly touched upon these issues that we will hope to discuss today during the panel discussion. And obviously, the discussions will continue even beyond this. So at this point of time, I would like to introduce the audience and panel to Jugnupati, investment specialist at ADB Ventures, Just a quick introduction, ADB Ventures has been investing in emerging Asia, supporting seed, early and early growth stage startups that are also trying to create a positive impact on the environment. So with this, I would like to hand over the floor to Jugnapati to share his thoughts on how to scale up investments in this space, in the region, and also to set the scene for the panel discussion which will follow. Over to you, Jugnu.
Thanks, family. Hello, everyone. It's a pleasure to be part of this session. Thank you, Peter, for sharing PFAN's experience with us. I think that was really insightful. So I'm Jugnapati. I'm a fund manager and investment specialist with ADB Ventures. It's the venture arm of the Asian Development Bank. It really feels good to be here today. Looking forward to the panel discussion that will commence soon. But before that, let me share a little bit about ADB Ventures and our journey so far. As you know, climate change is a big challenge ahead of all of us today, and we really need to take steps today and now if we want to or hope for a better future. So the greatest lever we have is the use of technology that can actually help us achieve this at scale and quickly. And it was with this in mind that ADB Ventures was set up in late 2020. So we are a climate tech focused venture investment platform that provide funding and support to technology-driven businesses with significant potential to scale and deliver climate impact in developing Asia. Our vision is to really crowd in at least $1 billion of risk capital for clean technology by 2030. And we hope to achieve this by leveraging ADB's unique public and private sector networks across Asia to really de-risk and accelerate market access. So we have two pools of operational capital today. One is a venture equity fund that invests anywhere between 1 to 4 million in first checks in early stage climate tech companies. And the second, a seed pool where we provide small reimbursable grants for de-risking new technologies or markets. We have done about 40 investments till date across sectors. Some of this include smart industry, green energy, sustainable food and agri, circular economy, as well as some of the cross-cutting solutions in fintech, data analytics, and supply chain. We focus on both climate mitigation and resilience, and we have a gender lens which we apply across all of our investments. We are also launching a climate tech debt fund to provide working capital and growth debt for venture-backed companies. We operate across the capital stack and address significant gaps that we see in the market today. So while the global investment in climate tech is booming across other markets, be it US, Europe, we see that the same hasn't translated as much in Asia, which is still significantly lagging behind some of these other markets. So what are these challenges that we are seeing in this sector, and really what can we do to address some of this? First, we think most of the capital is actually being still allocated to large late stage companies. And if we want to spur innovation, it's important that the larger pool of smaller and mid-sized companies also get access to funding. So for example, we have gone in pretty early into the commercial EV segment and the energy efficiency sector as well. And we are seeing interest pick up significantly in these business models now. So we expect significant future demand for financing to come in at early and growth stages, and hopefully we can crowd in more private capital to address this market need. Second, we are seeing a growing number of climate tech solutions in developed markets, which we feel can be deployed and scaled in Asia. So we are a strong believer in the power of tech transfer. We invested recently into a German company, Noventura. It makes SF6 free dry air switchgear. I'm not sure if you know, but SF6 is actually one of the most potent greenhouse gases today. It contributes almost 23,000 times more to climate change than carbon dioxide. And it persists in the atmosphere for more than 3,000 years. So they are now developing this in China. We would like to have this technology available in other markets of Asia as well. Similarly, we invested into eGreen Global. It's a Korean potato tuber company that has successfully grown high-quality, disease-free, low-cost microtubers at commercial scale and is now starting to deploy this tech solution in other markets. So I think that's a part of tech transfer, and that's something that we can really do to address this market. Third, we are seeing an increasing need for patient capital. If you see some of the climate tech solutions, we are seeing that it's taking much longer to mature than traditional VC sectors. So we have a longer holding period for these investments. Similarly, we see there's a gap in debt funding for growth stage ventures. Most of them are actually using equity to fund their working capital needs. This is true for some of our own portfolio companies as well. So while most of these growth stage ventures are backed by strong sponsors, they're showing strong revenue growth, have a strong equity base, they actually fall between the gaps when it comes to access to institutional debt capital. So we are trying to address this gap with a dedicated climate-focused venture debt fund. And last but not the least, we feel companies need more than just capital. They need access to networks. They need the know-how to expand into newer markets. They need access to policymaking bodies. They need access to the right talent pool. So our key learning has been that business models in climate tech are evolving. They will need time to mature and scale up. And as investors and funders, we need to be flexible. We need to be supportive and back the right teams. And we really need to work together if we have to make this possible. The first step to finding a solution, I think, is to identify the problem. And that's what we're trying to understand here, trying to understand what the challenges are that SMEs and growth stage companies are facing and what we can do to help them in this journey. With this, I would like to hand over and look forward to a very interesting panel discussion. Thank you, everyone.
Thank you, Jugnu, so much. Yeah, I think the point that you brought up in the end was investors and funders need to be flexible and they need to work together. I think it's a very good segue into a panel discussion where we are bringing together experts from the investment space and project developers that we have been working with. But before that, I would like to introduce our moderator, our dear colleague and senior expert, Peter Dupont, who has been leading the PFAN activities in the region with more than 30 years of experience and being associated with ASEP for many years now. Peter is also the managing director for Asia Clean Energy Partners. And in the past, he has served as a senior climate advisor for USAID. Peter, over to you for the panel discussion.
Thank you so much, Pamela, and thanks to all of you for tuning in on your local ASEF cable channel. It's great to be here. I'd like to just recap a couple of things we heard. So, Peter's story, thank you for sort of describing what life is like in the trenches. In fact, I've just been reading some histories of World War I, and it's a terrible analogy. But it is tough there. It is a bit of a battle. You highlighted all the work we've done to, get 212 projects financed over 15 years. Whew, it's sort of exhausting. And you mentioned 1,200 projects supported to get 212 closures. And just, to set the stage for the panel, in the trenches where we're working with, and most of the people on the panel have some relation to PFAN, either as investors or project developers. First-time project developers, new technologies, lack of clear policy frameworks, lack of clear offtake contracts, unrealistic timing expectations. You don't get two bites at the apple with investors, unrealistic valuations. And then further talked about the importance of mezzanine finance as a bridge. And then something we've been playing with at PFAN, which is, better data, having data rooms for projects and things like that. And so those are some things to keep in mind for the panelists. Like to thank Jugnu for joining us and talking about the exciting vision that ADB has set out with this ADB Ventures. I remember discussions 3 or 4 years ago where this was just getting up and going. Been keeping in touch with Dominic Malor and the team. And it's just great to hear about the progress you're making with the Venture Equity Fund, the ambitious target to crowd in $1 billion of venture finance by 2030. And importantly, this climate tech ventures debt fund and the gap to address the gap in debt funding for growth stage ventures. So thank you, Jugnu. We have a great panel here. Let's go to panel view now, if we could, Matt. And I'd like to first welcome Jignasa Johnny Visaria, who's the head of renewable capital for Fourth Partner India. And so Jignasa, just by way of setting this up, you had the corporate development arm at Fourth Partner, and you're, among other things, you're responsible for debt fundraising and fund management. You've worked with lending banks in India like the Development Credit Bank, HDFC, and Yes Bank. So Fourth Partner is a known name in commercial and industrial sectors. It's quite a success story. You've had multiple waves of fundraising since your startup in several years ago. You started as a solar EPC, but are now involved in energy trading, battery storage, EV infrastructure solutions, and you manage a portfolio of about 950 megawatts peak, and have set up 2,000 plants across India. So the first question I have for you is just if you could describe a little bit your story. How have your funding requirements changed as you grew from a micro or a small enterprise to a larger enterprise? And what are some of the key opportunities that Fourth Partner's been able to tap into?
Thanks, Peter. Good morning, everyone. It's a pleasure to be here. And whatever Peter said, Jugnu said, a lot of that resonates with us. And we've actually been through that journey and seen a lot of that unfolding. And we started as Peter said that as an EPC player, around 2010. We are almost an 11-year-old organization now. We were very focused that we want to be in the C&I segment. That is one segment we thought, which will be the growth area in the coming, years in this decade. And as we are actually seeing it, that, considering, the focus on green energy, the focus to decarbonize, most of the corporates are now having these, goals of getting 100% green energy. So I think we've now, the last 10, 11 years of hard work, I think we feel that now we are in the right place at the right time. But just to go back to our journey, when we started, we were a pure play EPC player with very small funding requirements, largely to do working capital requirements and small equity requirement till we would hand over the plant to our CapEx clients. But what we did is, we went to some small Indian banks, local Indian banks, and some angel investors. ADB actually also had done a very small equity round with us right then. And, Chennai Angels. So very small startup funds gave us seed capital to, grow our EPC business. But what Fourth Partner, the philosophy we had in Fourth Partner is that always build good processes and have good people. So when we move to the next stage, when we move to a larger, we become an SME, when we move to a developer stage, that time all the key ingredients are in place. So three things that, we've always focused in Fourth Partner is process people, fundraising capital, especially when you move to the developer model. And third, and the most important is your client selection. Because the space that we were in, unlike a utility scale, where, you're dealing with the DISCOM, you're dealing with the government and, large plants, we were going to deal with, corporate and industrial clients. So to draw an analogy, we think that our business is very similar to that of a lender, where, a lender actually evaluates the client and gives a loan. We actually evaluate a client and, provide them energy for 25 years. So I was brought into Fourth Partner, in 2017. My background is primarily of a lender and a credit risk background. To set up the credit risk function and project finance function at Fourth Partner with the idea that, we are going to take risk longer than any financer ever takes, So what we've done internally is we have a very, very strong risk practice, an internal actually credit risk rating model where every client that comes in, they are, we look at which industry they are from, which stage of development they are. Can we stay with them for 20, 25 years? So, something which I always harp upon is vintage. We can't sign a contract with them for 20, 25 years if they haven't been at least in their business for 20 years. So this is something which is very unique to Fourth Partner, having an actually credit risk department within the organization. Another thing that we did was, PPA underwriting. Over the last few years, what we've done, we've really focused on the kind of contracts that we sign with our clients. Because these, Peter, Jugnu, both of them were hinting that, everybody, the financiers, investors, everybody wanted to be sure that these contracts actually stay for the course of the period, whether they are actually enforceable. So a lot of focus has gone on, how to formulate these contracts, how to negotiate these contracts and ensure that, they are they take care of the interests of the investors, of the shareholders and the lenders. And, the third thing that we've done is capital raising. Now, whenever you move to a developer model, you have to understand that capital becomes the biggest ingredient, because you're going to hold those assets on your books, and provide energy as you generate. Now, solar being an intermittent, power supply, as it is called, right? A new sector. So, we had a lot of education that we had to do of our investors, of our lenders, because a new sector where people wanted to understand that, how the yields would play out, what are, there wasn't too much history to see, how these generations would play out, whether what we are assuming, whether the yields would actually be what we are saying. Similarly, with the equipment prices, constantly changing, new technology coming, a lot of education had to be done that why, this is a good investment. Lenders were actually initially very, very wary that, whether we are able to, whether we can actually do long-term investing in a solar company, which is new, in a technology, which is new. So what at Hope Partner, we thought that let us get our capital structure right. The first thing we need to get is very good equity partners. So we got, in TPG Rice Fund, I think we got an equity partner who not only had very deep pockets, but also, had that climate, fund, the sustainability angle in, there. So when they came in as a partner, we got somebody who opened doors to, for us, where large off-takers were concerned and even financiers. So, Food Partner has had a one in a kind, where we have a $50 million line with Bank of America, New York, where, they set up a line for us, for 50 million, where whenever we would develop a project at COD, they would come in and they would do the financing. So it is
great. That's great. Can I ask you to wrap up? You've covered so much. I'm sure you've done some things wrong, but I can't tell listening to you anything you've done wrong. It's super interesting. And just because we have a lot of panelists and I want to get to discussion, sure. I really appreciate the fact you talked about the fundraising model and really being focused. And then the sort of the way you've set up the strong risk practice, underwriting these PPAs, so it's all fascinating. And then, how having good equity partners can be the gift that keeps giving. So really, thanks for that. We'll come back to that. And that's a good sort of, just pin that up for some of the, the things to do well, because we've seen you succeed. How many rounds of capital raising have you been through now since you were started in 2011?
2 rounds, actually, if you leave the angel investors, then 2 rounds of equity fund raise. So one with TPG and the second round was with TPG and Norfolk.
Great. So thank you. We're going to move from India to Bangladesh, and Mohammed Shoaib, who's the head of corporate business for LankaBangla, which has been working on green bonds for refinancing energy projects. So, Mohammed, thank you for joining us today. LankaBangla started in 1997, and you're a leading provider of integrated financial services in Bangladesh, including SME financing. Your company is listed on both the Dhaka and Chittagong stock exchanges, and PFAN has been supporting your company in setting up a green bond framework. I understand there were some hiccups last year with the regulations with the government, but could you tell us a little bit your story about getting interested in green bonds from both a developer perspective and from an investor perspective? And thank you again for joining.
Thank you, Peter. As you mentioned, that Longabella Finance Limited is a listed company, and we envision to be the most preferred financial institution in Bangladesh. Our mission also revolves around sustainability financing. We have so far financed many green projects, including brick clean efficiency project, ETP, green factory, green building, energy efficient recycling, and hybrid projects. Our current portfolio of green portfolio is around 176 million. As you have mentioned, we have started to work with PFAN for raising a green bond. As all we know that the green projects require new technology and require more costly than the conventional projects, and for that we have to raise the project cost is a bit higher than the conventional projects. So earlier the projects we have financed, that is financed through the two sources mainly. One from our central bank, that is Bangladesh Bank, has different refinance projects, which project cost is much lesser, and our own fund, fund is much cost is higher. As you know that the as I have mentioned that the newer technology requires fund cost is require less financial cost. That's why we are interested to work with PFAN to raising a green bond. Our initial target was to raise fund from different ESG investors. The fund would be in euro, and so initially we have targeted to a Euribor plus 3% margin for the investors. As you have mentioned, for the developers' perspective, the first concern is less interest rates and begin with keep our risk exposure limited. And for the second concern is to, as a new project, it will be challenging for us to find underwriters who have experience to raise similar kinds of bonds for SMEs. And the third concern is to managing an efficient and experienced team to lead the operation to success and sincere efforts all over to ensure successful competition. As an investor, the first step is to access the project to its merit. When the project is assessed over its credibility, uses of the proceeds and the project cash flow are of paramount importance. As to cost benefit analysis is a must. Their technology management profile, capital injection, forward looking approach following of environmental guidance will be of my first top priority list. Environmental clearance of such project also very much crucial. As you have mentioned from our recent experience, any uneven turnaround events like what happened in the COVID-19 pandemic and recent the Russian-Ukraine war often affects global economy as well as in a way such a way that it poses a major challenge for both investors and project developers. Thank you, Peter.
Thank you so much. And I just have a follow-up question, Mohammed. What is a particular focus area that you see for the green bonds? I mean, are you targeting particular asset class or sector that you think is interesting for the first raise?
We are focusing mainly two sectors. So one is, as you know, in Bangladesh, our air quality is very poor. The main polluting sector of the year is the brick kiln. So we are financing the energy efficient brick kilns. And second is as you know, as the second largest garments producer in Bangladesh, lots of green factories taking place. Already there is 150 green factories there, but so many in the line. So these two, and another is the green building. These sectors we are focusing. Thank you, Peter.
Okay, thank you so much. And that's great. We really appreciate that. And like to move on to our third project developer, which is Barani Aung, who's the managing director of Techno Hill Engineering. She's calling us from Myanmar today. So you're one of the early and successful developers of off-grid solar mini-grids in Tanantari region in southern Myanmar. And I remember meeting you and being very impressed about 3 or 4 years ago in your plans to develop mini-grids. So that region is particularly interesting because it's off of the main grid in Myanmar, but there's quite a sort of a network of regional grids which have unlike the main grid, they have sort of contracts and terms and sort of regulated utilities under the contracts that they have with the different with the regional government. So interested to hear if you could describe the current situation. Like, we all want to know what's it like in Myanmar actually trying to get things done. And when I say PFAN's working actively in Myanmar, people are often surprised. So what is your view there? And like, what are things like for you now? And what are the main challenges you faced in getting financing? And also congratulations for sort of you just got like a $50,000 grant for one of your systems. So congratulations on that. But welcome, and interested to hear your perspective, Bharani. I think you're muted.
Sorry, can you hear me?
Perfect, great.
Yes, thank you very much, Peter. Yes, so our company is Techno Hill, and currently we are we have developed and operating 20 mini grids at the remote island villages, and then 2 are under constructions, and then we are now moving next steps of constructing the solar dryer domes, cold storage, and also water pumping at our mini grid villages to produce and also promote the clean and better quality food products. And then as for the project developer operator, currently the fuel price is, dramatically increased, and the supply from the national grid is also not very secure recently. So as a result, the demand of the using solar energy is rapidly increased. But the transportation and logistic costs are very high, and some areas are not secure for the transportation. And also inflation and the currency issue impact the willingness of invest. And also as for the developer and also kinds of financial organization like World Bank is also postponed the support to the mini grids, and also other financing organizers are also suspended for the investment. So as for the developer, we have a struggle to access finance currently. And although there are a very huge demand of the using solar mini grid at the rural communities.
Yeah, well, that's very interesting. What about how is it different in Tanantari compared to the other parts of the country where the mini grids are being set up in areas where the grid has not arrived, and it's very much a subsidized model? As I understand it, the situation you're in is more or less full cost recovery, whereas a situation in the areas where they have the World Bank and the Department of Rural Development, it's highly subsidized. So can you talk a little bit about those differences?
Yes. For national electrification, the national grid is not covered the whole country, and then also it is required about 15 to 20 years to reach to cover the whole country. But for national electrification plan, the mini grid development is also required at the rural areas simultaneously with extension of the grid. So the development of the national mini grid network is very important. But because of the recent political issues, the Tanintari region is still, because we are working at the island villages, so we can say it is not very affected when we compare to the other central regions. But even if the national grid had reached to, yes, definitely for the island areas, it's difficult to get the national grids, and also very costly. But even though if the national grid arrived to the other regions, recently the national grid policy is so we can always connect to the national grid.
Yeah, well, I have one other question. I'm not going to let you get away without asking. I'm just curious about So we talk about speed and scale at ASEF, and the amount of investment we have is only about 1/3 to 1/5 or 1/6 of what we actually need. So in the context of Myanmar, we need to scale up companies like Techno Hill. We need, 1,000 Techno Hills in just Myanmar alone. What is your vision? Do you see yourself potentially getting into distributed energy where you're no longer doing mini grids, you're doing like the SPP model like they have in Thailand or other countries where you're actually really doing distributed energy connecting, grid connected solar at 5, 10, 20, 30 megawatts?
Yes, definitely. Yes, definitely. We need, as you had mentioned, we need, thousands of Techno Hill company or something like that in order to construct the electricity network to cover the whole geography of Myanmar. So this is what we really need. So not only, off-grid or whether on-grid, but not only as a project developer operator, but also, yes, we have to go up, next step of IPP or wherever we can have the chance. Our focus is, as for the electricity provider, we have to provide the electricity, good quality power to the community. So this is our focus. So we just need, to connect each other so that we can, cover the whole country with a better quality power supply.
Yeah. Well, okay. Thank you for sharing that. And I think we need to keep this in mind, the fact that this is really, as one of the panelists in the opening plenary said yesterday, it's a huge change. It's not just a change in one source of energy to another. It's a change in the political structure of how we build the energy systems. It's a change in the legal structure. It's a change in the social structure. And your decentralized approach is very much noted and appreciated. So thank you for sharing your experience. So now we're going to move on to investors. We're going to keep everybody here. We can fit 8 on. We have one more, but that's okay. We can jump around. But we encourage those of you who are watching to submit questions in the Q&A. We have another quite a while, 35, 40 minutes. So we'll have plenty of time if you have questions to share. So now we're going to go to someone I've known for several years, who is the person I talk to when I want to find out about things related to sort of syndicating debt, bonds in general, green bonds in the ASEAN region. His name is Cedric Riemel. I hope I didn't mangle the French too much, Monsieur Cedric. And he's the ASEAN Program Manager for the Climate Bonds Initiative. You're also a fund manager for First Degree Global Asset Management. Maybe you can tell us a little bit about that. In addition to your work for the Climate Bonds Initiative, you have 25 years of experience in fixed income fund management, credit analysis, and bond research and rating. You've been in Singapore for the past 7 or 8 years. So I had 2 questions for you. The first question, I won't ask it, but I'll just share with the audience that you co-authored a paper in Global Finance called Power Purchase Agreements with Incremental Tariffs in Local Currency, an innovative green finance tool. Great bedtime reading for those of you here. So check out Global Finance Journal. It's PPAs with incremental tariffs. We can hear about that if we have time, but and I'm happy to share that, or Cedric could share with anyone who's interested. A very interesting and provocative idea. But the question I will ask is what is a corporate debt guarantee, and how do you think this could be applied to finance SMEs in Asia? How can this help solve the problem of slow uptake of and underinvestment in green energy business and projects? And why are you so confident that it's a good answer?
Thank you very much, Peter. Very glad to be here. So yes, indeed, I have been working in the ASEAN region mostly on green bond over the last few years, and the green bond have been a global phenomenon. since 2015 and the Paris Agreement, we have seen a tremendous rise of this kind of instruments. And the reason being that bonds are widely used by many investors around the world at different levels, different kind of investors. They want a fixed return, they want a predictable return, and increasingly they want a return with impact, with positive impact on the environment or social impact. So globally, we are talking about already $3 trillion of debt that has been issued with a green or sustainability tag attached to them. So there is huge demand from investors. However, in ASEAN, the numbers haven't been so great. I mean, we have seen $30 billion of issuance to date. So it's relatively tiny. I mean, there are reasons for that. A lot of the countries don't have very well developed bond markets to start with. And I think a lot of what has happened globally is that there is a lot of debt that would have been issued as part of the ongoing flow of capital that has been rebranded because they are directed at specific investment. But, they are participating from the general fundraising of existing large corporations. And in ASEAN, we don't see that yet. We've seen some successful issuance from sovereign issuers like the Republic of Indonesia, the Thai sovereign, Malaysia has issued sustainability bonds. Singapore has just announced that they would be issuing shortly a green bond as well. So definitely the sovereign issuers are a big driver. But we see relatively little from corporates. We see large corporates from Thailand, Philippines, or Singapore come to market, and some of the banks, but it's relatively small compared to the huge amount of capital that is needed. And clearly, I mean, all those projects that you have successfully worked on at PFAN, the 200 plus projects, hopefully we can scale them up using these instruments going forward. But there is a lot of barriers for that. When we hear from our investors that we speak to try to channel their capital towards the region, there's a lot of blockages. There is the risk of the country that sometimes they are a bit afraid of. There is the risk of the currency for some investment opportunities. There is the risk inherent to the project, the fact that the projects are risky and they don't really have a good handle on how to consider all those risks together. So definitely a corporate guarantee from a bigger institution would definitely help a lot of those projects to be able to secure them, to make them more bankable. And very often these projects are relatively small as well, and tickets that investors are looking for are usually in the $100+ million in size when they want to allocate to their various funds. I mean, I'm talking about the big asset managers of this world, the BlackRock, the Fidelity and others, these big funds that when they deploy capital, it's in big chunks. So we hopefully we can use those green bonds that are very successful otherwise in developed markets and are now very well established. Even the regulators in ASEAN have done a tremendous job in putting the regulation in place so that the capital markets are equipped with the proper regulation to justify how a green bond is. Climate Bonds Initiative itself has a successful certification program to guarantee that the right projects are funded under the green label. So that's not a problem. This has been done. And there are many projects looking for financing. That's also not a problem. The issue is to gap the two between the investors and the projects looking for capital. And as we all know, there is urgency in funding the transition to a lower carbon economy. There are trillions of capital that need to be invested. And all those projects that you guys are working on, they are great, but they're usually small scale. And we need to find a mechanism to aggregate them so that we bring the capital more quickly to the project owners so that they can really implement their solution against climate change. And I'm working on that as part of this asset management business that I'm in. We are trying to find projects around the region, repackage them as a green bond, and a corporate guarantee from the likes of ADB through the CGIF Trust Fund or Guaranco as well, which is also funded by multilaterals, is a great mechanism to approach investors and say, look, this has been looked at by ADB or Guaranco, and essentially, they are guaranteeing the deal. So hopefully that will help in some instances to bring investors to finance those opportunities. But we need more of these guarantee mechanisms. They are very instrumental in reassuring investors. And sometimes a guarantee can be a partial guarantee. It doesn't need to be for the full deal. The signal that an entity like ADB or Guaranco are giving to investors that they have reviewed the deal, that they have validated it, that they think it's a good risk to take on their books, is a very strong signals to investors. And you know, that's where the capital could be better employed to scale up this sector. And a guarantee is usually an unfunded guarantee. So from the point of view of the guarantor, it's not a capital outflow. It's I mean, obviously you have to manage this portfolio of guarantees. You know, it's like an insurance business. You have a book of liabilities potentially that you have to risk manage, but this doesn't need a lot of capital if it's managed properly. So that's where the scaling mechanism can happen, that you know, by providing these guarantees to smaller businesses and combining them into chunks of investment opportunities that make sense to investors, that's how we can really scale up this market. And using green bonds as a mechanism. Ideally, we would like to issue green bonds of 100 million, 150 million, 200 million at a time, and then, you know, generate interest from various types of investors. Normally, it should be the banks that should be playing this role. It should be the banks that should go out there, issue green bonds, and then lend to the SMEs. But to be honest, even in ASEAN, we don't see a lot of banks issuing green bonds. I mean, yes, we have been.
So I'm going to ask you to chunk it down for us, because we have some banks who are going to be talking, and you're provoking maybe some reaction from them. But the question I want to ask, and I'm sure Chintan from IRETA and Rajiv from SIDBI will have something to say, as will Asmir and Itipan. But break it down for us. How would this work? Who needs to be the driver? What's the, you know, how do we get some traction in this area in the next year in say either ASEAN or South Asia? Who needs to lead?
I mean, let's take the banks that are on this panel, you know, CIMB or Casicon. You know, they already have a green bond framework in place. You know, they have already done some transactions in the market. You know, they could do bigger transactions to fund more loans to their small SME projects. But that needs to be for projects that are already their client. Very often we bring client opportunities to the banks and they tell us, well, we don't really know this company. You know, it's not a client of ours. So it's kind of something we will look at, but you know, maybe there's not a big chance that we may fund it, because the bank is also risk averse. So you know, there's a lot of projects that need financing, and even though they don't bank with one of those banks, they still want to access investors. So either the banks step up and issue bonds and accept to extend the capital that they can deploy, or entities like a fund manager goes out there and then offers capital that is then repackaged to investors directly, and we bypass the bank. But there is urgent need to scale up this market, essentially.
That's great. So what we're going to do is I had the order. I wasn't thinking clearly. So Chintan and Rajiv will come back to you, but we'll stay in Southeast Asia, and then we'll end up in India, if that's okay. Itipan, you've got this Go Green backdrop there, and I just want to briefly introduce you, and maybe you can comment on Cedric's idea. So K-Bank is one of the leading lenders for clean energy in Thailand. Over the past decade, you've been involved in the groundbreaking Energy Efficiency Revolving Fund. You provided low interest credit for energy efficiency projects, and also been involved in financing many medium and large size clean energy deals, as well as basic infrastructure. So, you know, tell us a little bit about your role at K-Bank and what gets you up in the morning, like what you're trying to do there. And you know, I've known you for about 8 or 10 years. You're one of the more active people at K-Bank, but K-Bank is actually doing quite a lot. But could you do more? And can you reflect on Cedric's idea and challenge?
Thank you, Peter. Good morning. Have you known each other for 8 to 10 years? I don't know.
Yeah, I think so.
Time flies.
I was a groupie. I was a fan club. I used to go watch you at the banking meetings.
All right.
No, I
Okay.
think you came to ASEF maybe 5 or 6 years ago.
Yeah.
And your predecessor Mac came to ASEF maybe 7 years ago. And basically he had collateral-free energy efficiency financing, and that I remember that was one of the interesting things that K-Bank was trying. That was quite a while ago. Anyway,
right.
over to you.
All right, thanks. Okay. Well, I still hung up on strategic comments, but let me okay, go through your question first. Okay. The question, what I get us in the morning, what to do is struggling, put in one word. Anyway, what we do here, or what I'm doing here, is we're trying to develop the green financing for the commercial markets, which means our customers are mainly corporates or SME customers. More recently, we're focusing on SMEs markets, which is also growing. I would have to say that first, when we developed this financing scheme, it started out with the energy efficiencies, which is driven by the ESCO model, the energy savings company, mostly related to the energy savings in the corporate segment. Later on, we become quite active in the renewable energy, specifically the solar rooftop financing for commercial and industrial segment. I have to say that if go back to at the market in the early stage, I think we are dealing with three things that we have to find the solution. First, our technical understandings of the renewable energies and energy efficiency. And I have to, I'm grateful with the help of PFANs in the early stage that when we did the very first few solar rooftop financing, we need a lot of education to the customers, also to ourselves, to our credit committee as well, that the projects would be worthwhile, the project would be feasible. Because Thailand actually is not in the energy shortage. You know, we quite well equipped with the energy. Also, the price is not in a very high or very low range. So it takes a while for the consumers to find it attractive to go.
Right, and just to follow up and be clear, that was like a solar rooftop calculator model, correct? That
correct.
USAID sort of helped with a tool that could help you analyze projects, correct?
Right. Not only that, I think PFAN and USAID helped us to help on the technical assistance, like finding the right suppliers, finding the right installer, or ensuring the technical aspects and the equipment use is up to the standard. So that's help us as a bank or also the business community to understand more and to be confident on using the renewable energy within their business. Okay, and then we have developed that market, and it's grown very fast in the past 3 or 4 years, and now we see that there's more adoption in the SMEs market. Okay, and that is just only the technical aspects. Okay, on the marketing side, I think the banks and other business partners, including PFAN and other organizations, we're trying to educate the market by organizing a number of events and conference on the renewable energies and on the clean energy to the market. We've been doing that through the conference event. We've been doing that through direct approach to our customers. Actually, we are selling finance, we're selling credit, but we approach customer to sell the technical aspects, which is not easy for the bank officer to do that. But we've done that a lot. So that's put our in a position that we are active in the green financing.
Okay, so just since we don't have a whole lot of time, maybe, from a K-Bank perspective, how do you react, or how would your green team react to this idea of green bonds and scaling up these corporate debt guarantees for sort of pools of projects or standardized ways of packaging them into bonds? What are your reactions? What are the challenges for K-Bank for doing what Cedric suggests?
Okay, there are many aspects of green bond. First, I think, we have issued green bonds, and we would like to do more to give Cedric some comfort. But what's the barrier? I would put it that way, is that first, most of the Thai banks are well funded through the saving markets or whatever. We don't need funds. We don't need a lot of funds. And when it comes to issuing bonds in the capital markets, we're quite limited. We have limited room to do that, especially when it comes to green bond with the foreign currency financing, because we are doing mostly on the local currency financing, Thai baht financing. So if we want to bring in any foreign currency funding, we have to make sure that we have the way to utilize that. Of course, the bank are expanding overseas. We are doing more and more projects, especially green projects in the neighboring countries. So I think we'll have more room in the future, in the short future, I would say. So that's one thing that we don't have. Just the funding in general, we don't have much room because we are actually overfunded by the local community.
That's an interesting dilemma. With that, I am going to move on. We'll have a chance so people can reflect at the end. But thank you for sharing. That's real challenge that you have, and we can maybe give Cedric a chance to comment on this later. But let's go to Malaysia and Asmir. Thank you, and then we're gonna sort of move a little more quickly now because we want to go back to India. Thank you, Itipon. That was great. So Asmir, CIMB is very active in developing financing for green businesses. You've launched Green Biz Ready, which is a one-stop shop for sustainability for green solutions for SMEs. Just a two-part question. What's driving CIMB's shift towards green lending in its portfolio? And since we're talking about this, I mean, you can talk a little bit about the challenges, what's driving your move and the challenges you're facing, but also comment on Cedric's sort of call to arms to really scale up the packaging of green bonds and just as a huge potential market. Asmir, thank you.
Thanks, Peter. I think I'll address Cedric's point very quickly. For CIMB, I think we've issued an SDG bond earlier this year in January 2022. It was $500 million, and the proceeds is supposed to partly finance some of these space. Of course, like I think I echo Itipon. I think we also have our other sources of funding that we'll use to finance the space. In terms of what's driving, I think CIMB being one of the largest banks in Malaysia and an important stakeholder within the finance system, I think we are playing our part, right, to kind of transition to finance the transition to net zero. There is a great need, a great requirement, and I think we're playing our role there. We look at it, in both aspects. The opportunity side of it to finance the transition and achieve a common goal by 2030 and 2050, right? And also, I think at the other side of the coin, I think we also want to avoid, or move away from things that may pose a risk. Funding like stranded assets, right? So I think both sides of the coin, we're looking at opportunity side as well as the risk side. In terms of the challenges, in my role, I focus a bit more on the SMEs. I think the awareness, amongst the SMEs in Malaysia can still be improved, right? A lot to be improved. in terms of, I think, the challenges within as well, I think sustainability's understanding, understanding of sustainability, is at different levels within the bank, right? And of course, the front lines used to, just talk about credit and, talk about business, but now, there is that element of sustainability as well in the conversation, right? So that probably takes a bit of time, and we are, improving day to day to kind of, make that as, second nature, even in our front lines to incorporate sustainability in their day-to-day dealings. And within the bank, there are many other internal stakeholders as well, credit risk and whatnot. So to move forward, I think, that could be one of the challenge, but, of course, we've got frameworks, we've got engagements and other initiatives to kind of, overcome these challenges. That's internally, like what I said, externally, I think we are doing external engagements as well, to kind of build capacity for the SMEs, because it's very important for the SMEs to really understand why sustainability is important to them, why should they start on this journey early on, rather than later, because, at one point in time, they will be impacted, being connected to the global supply chain. So those are some of the challenges, Peter.
Yeah. So I'm going to put you and Ethiopia on the spot for a moment, because you've expressed that very well, and we really value you as a PFAN partner. We've had several workshops to introduce this idea to your relationship managers, and I think we're coaching 3 or 4 projects that you helped to source. PFAN is coaching in Malaysia and the region. So thank you for that. But let's say it's not happening with the banks, and Cedric and some friends go and they raise $150 million for a green bond for SME manufacturers, whatever, in Malaysia or in Thailand. Itipan, would you be interested? Would K-Bank be interested in buying into that, making some investment? Yes, no, or not sure, or maybe?
Yes. I think we've be interested. You mean so when you say investment, it's like we are talking what side of the coin?
Yeah. Well, no. I mean, Cedric was saying if the banks don't lead, then a fund manager can go out and find investors. So is that something that K-Bank as an investment, or maybe providing some of the debt for that? Would that be something you'd be interested in?
Yes,
K-Bank?
yes, we are.
Okay. And what about you? What about you, Asmir?
Well, it's not quite within my portfolio to decide on the investment, but I think in terms of raising debt for companies that's looking into the space, definitely as CMB has an investment bank arm, right? So we help clients raise that as well. We think it's worth to note that in 2018, if I'm not mistaken, we raised 1 billion ringgit to finance some solar farms.
Okay, great. Well, that's a great answer. And now,
Peter, can I say something?
Please go ahead, Cedric.
Yeah, I think banks in general are usually regulated institutions, and they have to comply with very strict, prudential ratios that is imposed by the regulator. So typically, a bank would be very prudent in their lending because of that. So they would raise green bonds, like senior secured bonds at very cheap levels, and then they would lend, but they would lend very short term at their best clients with the best borrowing track record. And we heard Peter's story at the beginning said that what we need is mezzanine financing. Mezzanine financing is typically more risky. And that's why you need this kind of investors to come in that have a greater risk appetite than what a bank typically would. And what I'm challenging the bank is that they should be an actor to transfer this capital. So allow these investment opportunities to flow through their book and offer them to investors. But this would be higher risk profile. So typically that would mean lending to 10, 15 years out, not the 3-5 typical tenor that we see from a bank loan. So I'm not challenging the bank not to do their part, but I think there are constraints in what they are doing. And that's probably one blockage that would need to be looked at. points.
Yeah, and thank you for that very important clarification, super important. And no, it's good to just flesh out all of these issues. So now I want to, we're going to go back to India. We've got about 15 minutes, a little under 15 minutes. So first of all, Rajiv Kumar, you're a general manager of Green Climate and Energy Efficiency Center at SIDBI, the Small Industries Development Bank of India. First of all, thank you for joining us, Rajiv. I've been following SIDBI for a while. You've been very active in financing energy efficiency and clean energy solutions across SMEs in India. And just put simply, since we probably have about 4 or 5 minutes to sort of hear your story, if you could sort of distill what SIDBI has learned from your experiences in terms of being able to mobilize large amounts of funding and then apply these to the small industries that are quite prevalent in India. And if you have a chance, you could focus on the energy efficiency upgrades, because that's a big part of SME climate action, is really the energy efficiency and upgrading kit and factories and equipment and systems. So Rajiv, thank you.
Thank you, Peter. Thank you, PFAN, for having me here. As you know, SIDBI is a development financial institution, basically with a mandate to promote, finance, and develop the MSME sector in India. We are not a commercial bank. We are a development financial institution. So, direct financing forms a very minuscule part of overall book of our balance sheet. We are directly lending to only niche segment where the banks are not very active. And energy efficiency has been found to be one of such segment where banks are not very active. And SIDBI has been in this space since 2005, particularly for the reason that we understood that energy efficiency makes them more profitable, their bottom line improves, and they become more resilient as well as more competitive in the market. So with that objective in mind, we have been promoting energy efficiency in MSMEs through, it all started through some lines of credit from JICA. We had 3 lines of credit from JICA, 30 billion yen each. And thereafter, we have taken a few lines from KfW and AFD, 50 million euro each. So all these were purely energy efficiency lines of credit. Subsequently, we also felt that besides financing, MSMEs also need a lot of technical hand-holding support. So we partnered with World Bank and implemented a project called Financing Energy Efficiency at MSMEs. It's a purely technical project wherein technical handholding support were provided to MSMEs in around 25 clusters. And we got their energy audits done, sensitization was done. And then we also provided them implementation support, and including finance if they wanted their projects to be financed. Basically, subsequently, we felt that SIDBI alone cannot do, it's a huge market. MSME sector, as you know, in India is a huge market and they are contributing a lot to the country. So we felt that we need to encourage other lenders also to come forward and contribute in this. So we, with the support of, again, World Bank, we are currently implementing a project called Partial Risk Sharing Facility for Energy Efficiency. And this is basically for development of energy service companies in India. And through these ESCOs, we are also encouraging other banks. When we are impaneling around, we have impaneled around 14 banks who are now willing to, we have created their capacities also, we have given them training, and now they are willing to finance these energy efficiency projects. And in fact, around 500 crore worth of projects have already been funded. And I mean, the good part is that none of these projects so far, no guarantee has been called. So
that was a question I was going to ask. So 500 crore is what? That's about $80 million or something.
Yes.
How much? Yeah. Okay.
Yeah.
So and then that's just to go back to Cedric's point. What's the risk here? What are the sizes of these loans, and what are the risks? It sounds like the risks are very low. The risks of non-payment for these energy efficiency loans.
The risk is there. I mean, mostly it is the perceived risk, and the size of loan varies very widely, from say $15,000 to $2 million or $3 million. So that is the range, and smaller the loan is. I mean, the higher the cost of monitoring, managing that loan.
Right.
And we have seen that mainly the risk is more of a perception, and through this kind of guarantee facility and partial risk sharing facility, I think that perception is gradually changing, and more banks are coming forward in financing energy efficiency. I think one thing we must all appreciate, that in India so far, financing energy efficiency has been purely on voluntary basis, and there has not been very kind of regulatory push so far. It has regulatory push or government push has come only after this COP26 announcement. So we see henceforth the market moving in with the good traction, and a lot of activity is going to happen. In fact, even SIDBI is coming with a number of partial risk sharing products in variety of sectors. Besides energy efficiency, we are coming with risk sharing facility products for solar rooftop, for solid waste management. We are also coming up risk sharing facility for compressed biogas, and also for electric vehicle segment.
Right.
So number of risk sharing facilities are also being planned along with line of credit to encourage banks to
Thank you for that. And that's a really good point about the risk profile, and especially if they're pooled. I think it sort of supports Cedric's idea that actually you could do a lot more at scale, but it's important to understand the sort of day-to-day challenges. And even someone like Itipon, his response to my question, like he's doing a great job, right? Going green, and really doing a lot of great work, but it's still a struggle every day, because I think Itipon knows how much you can do, and what the challenges are. So Chintan, last but not least, I will give you the floor to sort of share your background, so your experience with IRETA. So we got about 5 or 6 minutes. You were previously president at Suzlon, and you've had a lot of experience. You worked for TERI in the past, the Energy Research Institute. And just, since we have a limitation of time, I'll just jump to the question. As a significant debt investor in clean energy in India, can you describe the types of projects that you invest in? What's your minimum ticket size? What sort of mandates do you have? And maybe you could reflect while you're doing that on some of the thoughts and discussions we've had raised by Cedric on green bonds. Thank you, Chintan.
Yeah, thanks, Peter. I'll be also brief about it. Just for the audience, IRETA stands for Indian Renewable Energy Development Agency. It's a dedicated finance company created by Government of India in 1987. And from 87 till today, we have disbursed close to $11 billion in the renewable energy projects in India. And we have a book size of roughly $5 billion, which is apparently the largest renewable energy book in India by any bank, by any NBFC. So we have played a role to develop the market, to essentially demonstrate the market that this is something which is bankable, sustainable, scalable. And obviously we had our own set of learnings also in this entire space, and from that particular learning we have essentially tried to better the entire financing deals. I think a couple of people talked about the bond market. IREDA has been functioning in the bond market. We have raised bonds and all, but I have my own view on the bonds. As far as bonds for debt is concerned, I think best would be to tap on the local money market, because on a long-term basis, the hedging cost can be counterproductive. And India, fortunately, has now deepening its money market, and that's what I think every banker should be looking at. Essentially, looking at the local bond market. And that's one particular thing I would talk about. The type of projects, as IREDA is, last year we did close to about $2 billion of disbursement. And IREDA is into a variety of things. We do finance large-scale utility projects for wind and solar, hydro. And we also do very small size project as access to energy for mini grids, rooftop solar and all. So we have a very variety of things. We also have been financing also energy projects. It's essentially talking about bioethanol, compressed biogas. So it's a varied thing that we do. Ticket size, well, is roughly about $100,000. But obviously, we don't see such small size projects coming up over here, because we are centralized, located in Delhi. So most of the small projects would go to the local banks, the local financial institutions. But on an average, we see the size of the project that we finance is in the range of about $3 to $4 million and up and above. One particular thing which I would like the audience to know is, you need to essentially, the way things are going for the future in terms of going carbon neutral or net zero, financing is going to play a major role. And essentially, there's a limitations that the banks or the term lending money can come into the long-term financing. So we need to create the money market, the bond market, and a long-term one, particularly asset-backed. What we've been seeing in the Asian markets, particularly, the bond market is mimicking the corporate bond market. That means you have a sweet spot of 3 to 6 years. And when you have a renewable energy project, which has got a life of 25 years, long-term power purchase agreement, why can't you have a long-term bond market, something in the range of 10 to 15 years bond market? And you have a great asset, which is underlying for essentially servicing the bonds. So essentially, ideally speaking, is a perfect fit for a pension funds or an insurance money to get into the bond market. So that means we need to unlock the institutional capital, something which is very important. And this is needed as far as for the future is concerned. So this is something which I just had a view about it.
I'd like that's really fantastic. Maybe Cedric, I'd like you to just have a quick comment on the idea of sort of local debt markets. But before that, I just wanted to highlight when you pivoted to talk about net zero and the need to scale up and the need to have standardized structures, including bonds. I mean, you hear the same thing in the US. I was listening to some podcast about solar and storage. The same, there's a need for standardized documents and templates and just the ability to move more quickly, to move money more quickly, no matter what country you're in. Now, each country has specific barriers, but just quickly, because we're going to go to some final words from Nagaraja Rao. But before that, Cedric, do you have a comment on what Chintan was saying about the hedging cost and the bond markets and local bonds versus overseas sourced bonds?
Yeah, I mean, I don't dispute the fact that local debt is great because it doesn't, create some idiosyncrasies risk with the currency. And in ASEAN, we see half of the issuance of green bonds being in local debt. So that's not at all, a problem for that. And in terms of standardized documentation, there's also a task force that is under ADB that is also working on harmonizing the development of the bond markets in ASEAN. So this is all happening. And actually, India and also China have been showing great examples of securitized deals where they repackage smaller renewable energy assets or other types of assets, and then they finance them through a bond issuance. And ideally, that's what you would like to see for the whole ASEAN region. And I'm sure in Thailand it can happen as well because there's an active bond market locally. But in some countries in ASEAN, it's difficult. In Vietnam, in Cambodia, in Laos, in all those countries that are in great need of capital, these mechanisms just don't exist. And that's where the regional efforts can really make a difference there if we team up together.
Okay, thank you so much. We're gonna leave it there. There's so many challenges. This is a discussion. We've uncovered a lot of things that further discussions and interactions will be needed to solve some of these problems. But really thankful to all of the panelists. We covered a huge amount of ground. I thought an hour was a lot of time, that we could have taken longer, but hopefully we've stimulated some discussions and thinking and connections that people can make in the networking room here at ASEF or just by contacting any of us individually. So with that, I'm going to bypass Pamela, the moderator, the MC, because we're sort of running against the clock here. And Nagaraja, over to you for your final concluding remarks. Nagaraja Rao, who's the one of the co-conspirators in getting PFAN off the ground 15 years ago with Peter Story, and he's the head of global quality. Nagaraja.
Thank you, Peter. Thank you all for your contribution. And I can tell you, looking at this sector for the last nearly 20 years, I know many of you personally for a long time. We have had finance as one of the key sessions in all the meetings in SF itself. I've been there personally for several editions, at least 5 to 10 editions in the last till COVID hit us. And I can tell you that with each passing year, while the challenge has been growing, the solutions also have been growing. We have seen many innovative instruments coming. We have seen the markets develop, the markets change, risk profiles changing. But at the same time, we have seen tremendous amount of money getting, it is almost like a mainstream now, which used to be like in the fringes in the early years that I can recall. It has now become the mainstream financing, and it is more accepted. And the grid parity is something that people now do not question anymore. And we have seen how a variety of technologies have changed the entire renewable energy and energy efficiency scenario in the world. We had Peter Story talking to us about valuation and mezzanine, which is very important. And we have come across that in almost all deals that we have supported. Jugnu talked to us about technology-focused and climate impact funding. We have followed their venture capital firm very closely. We have been associated with it right from day one. And it's good that she touched upon one of the very important things, which is the working capital requirement of the companies, which is often what we have seen is that commercially the entrepreneurs are not that savvy in terms of financing and structuring, where PFAN helps them. So that is the early stage and the growth stage is where support is needed, where we need transaction support as well. And we have also had technical hand holding that Raju talked about. Raju knows very well about those things, and because they help the SMEs. We also I would like to bring a couple of points on this, which is one of the things that we see in PFAN is the value of debt, and that is something that every company passes through, and in that value of debt, cash flow is the one which finishes off projects which cannot manage themselves. And that is an area where we need to collectively think of more solutions, because once you cross that, I suppose, the chances of survival are more. Another important thing that we talked about was the credit risk, but also we should talk about credit risk insurance. That is something that we haven't focused on adequately, and that is something that we can work on to support this sector. While ESG has been the flavor of the couple of seasons, I can certainly tell you that the net zero and ESG go hand in hand, and that is creating a deeper market that Chintan talked about. And while we can certainly say that the green bonds have been like 3 trillion is a big number, but at the same time, I can tell you that the green bonds also have been placed in the market for 25 million, 30 million. So it is also possible to do that in smaller markets. We had Jignasa talking to us about almost, she converting herself into a bank. And I would say that, I was the coach for your company several years back. So, it's like a specialized green bank that you're working now, where you have the ability to manage the credit risk. But of course, it's very specialized because you're in the solar rooftop, and, credit risk ranges from technology to technology. It will vary. We also had very good inputs from Myanmar, where Barani talked about mini grids and solar, the speeding up of scaling up of projects is something that we need to work on in this sector. We had Cedric talked of green bonds and especially corporate debt guarantee, and which is nothing but, we are shifting the credit risk. So that has been there in many of the corporate markets anyhow. We are just taking that into the green bonds market as well. The partial risk and credit risks are something that is still to evolve in its full force, I would say. It is yet to take off, but it is happening. The foreign currency funding and foreign currency risks are something that we are still to deal with, especially given the ticket size and SME's inability to handle the currency risks because of their size and not having the economies of scale. There we still do not have a solution, and we struggle to find a solution wherever there is foreign currency funding. And that is what Ethiopia said, that they focus on local currency and local markets and not so much on the foreign currency market. We also talked about the venture debt that I think Jugnu talked about. That is something, and what Peter's talked about in terms of the revenue-based debt. These are something that are coming in as mezzanine debt, which is really helping this sector. So we also had Mohammed talk to us about the story in Bangladesh and how they have been able to develop that market. And he talked very effectively about the cost of funding and access to good projects and the lack of adequate underwriters when you're raising green bonds. Those are very valid points, I would say. So we had, I think, in 1 hour covered a variety of subjects across several countries and geographies. And I thank you very much for all the contributions that you have made. And from PFAN, I thank each one of you for your time. Thank you, everybody. And back to you, Peter DuPont.
Thank you, Nagaraja. And this is a lot of information. No problem. A lot of information. We are running out of time, so I'll be short. Thanking everyone, thanking the panelists. Hope to be connected, and thanking the audience for taking time out very early or in the afternoon. And have a good day, everyone. We'll close it for the session now. Thank you, everyone.